What's up, guys? Xpeng is set to release their earnings report before market open on Monday. So I wanted to jump on and give you a couple of things that you should be looking for, kind of things to consider before that earnings report comes out. I'm also going to break down the chart and give you an idea of where the price could be headed from here based off of the information being implied by the technicals. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin, and I am your host. In today's video, we're going to take a look at Xpeng. For those of you guys that are new to the channel, this is one of my favorite EV stocks, especially Chinese EV stocks. I sold all of my NIO, and I only own Xpeng when it comes to Chinese automakers as of right now. Guys, this is a stock that I've been dollar cost averaging into for a really long time. Made many videos on it, so if you want to see me go really in depth on the company, I will link those videos right here. Today we're just going to focus on the upcoming earnings report that's coming out on Monday before market open. I want to give you a couple of things that you should consider going into this report, guys. The stock is down about 50% in 2022 already, so I also wanted to break down the chart, kind of give you an idea of where I see the price headed from here, if it's going to fall down further, if it's looking like it's found a bottom, when you should be looking to buy, kind of what I'm doing, and then we'll kind of go from there. Real quick, before we get started, subscribe to the channel for me if you're new around here and want to see more videos like this, and then also like the video so it gets out there to more people. I would really appreciate that, and then also come join us at the Patreon if you want to get all of our trade setups. Day One Squad, I love you. Thank you for your support. But guys, let's go ahead and get started. First thing I want to look at, so this is their earnings, expectations, right? This is their consensus estimates of what they could potentially do. We just talked about, the Alibaba video a couple of days back about how China's had that zero policy COVID lockdowns that has just decimated their economy. So I think that there could be some rocky waters, but I wanted to point out a couple of things to look out for. So this is a long-term hold for me, right? Like I said, I've been dollar costing averaging into it. I think they're going to do very well in the long term, but let's take a look at what we think is going to happen in the near term. So they're guiding, or their analysts are expecting them to do about negative 30 cents on their EPS. As you can see down here, guys, that's about 116% in the negative year over year. So they were only doing about negative 14 cents in Q1 of 2021. So something to keep in mind there, guys. Again, that has a lot of different factors, when it comes to why it is widening, why their losses are getting worse on the EPS side. When it comes to revenue, they're looking at about 1.7 billion, which is up year over year. So if you take a look, it's about 150 or 55% year over year, but it's down quarter over quarter. So they actually did more revenue in Q4 of 2021 than they did in Q1 of 2022. But a lot of seasonality there, guys. Q4 of 2022 is right there in the middle of their peak, busy season right there at the end of the year. So something to keep in mind with that, but just know the next quarter for Q2, they're looking to do pretty much about what they did in Q4 of 2021. So about 1.34 billion. And then from there, 1.76. From there, about 2 billion in Q4 of this year. So their revenue is growing steadily. They are, consistently growing that. I really would like to see them start to cut this EPS down though. But it looks like it's going to stay about the same for at least the next couple of quarters. Now, if we jump over here, guys, the reason why I'm kind of bringing this up is because I think that there's still a lot of headwinds, but I do think that there's a couple of things that will be overshadowed, and I think there's a couple of things we need to look out for. So when it comes to Q1, we know that their deliveries have already beat, current guidance, right? So they delivered more than what they were expecting in Q1. So I don't think it's any, question that they're going to see a beat on their actual sales for Q1, but I think that's going to be drastically overshadowed because Q2 has already been off to a slow start, guys. If we take a look here, they delivered about 9,000 vehicles in April, which was 70% increase year over year, but it was down 46% quarter over quarter. Okay, there's a lot of reasons, guys. Again, there's a lot of issues with the Chinese economy right now with the lockdown. So I wanted to bring that up. They will beat on sales pretty likely, right? They had a great first quarter, but their Q2 has already started off soft. So I think that you're going to see some softened or revised guidance moving forward for Q2, and that's what could put downward pressure on this stock moving forward. Now, there is a couple of positive things when you take a look at, China is considering extending their electric vehicle subsidies. They were planning on ending those in 2020, but they're going to continue to extend those because of those lockdowns to kind of stimulate growth. So that's something that could absolutely help them, moving forward. The next thing that could also, help them in this earnings report is we've got to get an update on their European market. Guys, European market is the second largest EV market in the world. And so as long as they can report and let us know in this earnings report that their schedule is on point, they're actually rolling out those dealerships when they said they were going to, I think that could help. The other thing that I think we also need to keep in mind is their production facilities. If they can come out and give us good news that their production facilities are going to be finished on time, that's going to boost them to, 100,000 vehicle capacity, which will help them, pretty much be able to handle all of that pent up demand that has been, being shoved down with these lockdowns. So keep that in mind when you go into the earnings report on Monday. Guys, if we're just buying this for the long term, I don't really care what it does in the day to day, right? I really don't even care what it does in the month to month. But if you are looking to trade this, if you do not already own it and you're looking to take an entry, that's why I wanted to make this video, kind of give you an idea of where it could be headed in the short term. So let's jump over and take a look at the chart. So the chart, guys, is actually, it's looking pretty good, right? It's actually down at some nice value areas. We're starting to get that confirmation low. I've got all these harmonics drawn because I just thought it was cool. It's kind of like harmonic Tetris. You've got the first, initial bullish Bartley that turned into a pretty nice trade setup, hit the second target. But then we had the bearish Gartley that turned into a pretty nice trade-off on the downside. If we get some of this out of the way so we can see a little bit better, we are starting to get kind of a bullish shark pattern here. So we've just hit about that 113% retrace from the low back in May 2021. I sent this out as a trade setup from the top that was in December of 2021. Like I said, guys, we are down about 50% for 2020. Or 2022, excuse me. So something to keep in mind. We've also kind of got a, bullish dragon that's kind of been working on, which is also your first low, second low, so your confirmation low, and you're starting to react off that second low. Typically, guys, when you get a dragon pattern like this, where you've got your head, your neck, your first foot, your hump, your second foot, you trade the tail. So once you break your supply line, you can trade the tail. The supply line is also right at a critical level that has been historically either support or resistance. So if we can break this supply line, get back above that 25, 27 level and back test it as support, I think we could start seeing it work back, up to that $35 level. But it really is kind of going to depend on the Chinese market and what the earnings report looks like and the forward guidance. Again, I don't really think it's the sales. I think it's going to be the guidance for this earnings report, but something to keep in mind. This looks pretty good, guys. I mean, this is literally exactly what happened back here, just on a lower level. I mean, unfortunately, we couldn't hold the IPO price. We did break it, but every time it's broken down through that zone, you can see it breaks it, gaps back over it, breaks it, gaps back over it, or at least tries. It's trying to get back above it now. We're losing our negative momentum. We've got bullish divergence. We're trying to break up through that neutral zone on our relative strength index on the daily. We're starting to build positive momentum. So I think that these are those levels that you want to buy this stock in if you don't currently own it. Don't get me wrong, guys. The earnings report could come out. It could get rejected at this 25, 27 level, and it could absolutely dump back down to $17, which is your all-time low, and then it could go into price discovery. If we use our fibs, guys, you can kind of get an idea, like if it gets rejected here and we want to use like our structure, you could see it could be, the 1272 down there at $13.50. The 1414 at $8.68, and then the 1618 at $1.76. I don't think that's going to happen, but something to keep in mind if it gets rejected at this level and this confirmation, low and the bullish harmonic fails. in this market, guys, it's not improbable for a bullish structure to fail and underperform. So this is what we're looking for, guys. As long as we can get back over 25, 27, I think we're in good shape. And I think that your next target after that would be 35.85 because that's your next level, right? You get back above that 35.85 like we've talked about before, straight up, straight down, straight up, straight down. You get up over the top of it. You back test it as support, straight up, straight down, straight up, straight down. So you really got to get back above that $38 mark eventually, but these are your low risk areas, right? You could easily take this trade if you can get back above 25, 27, setting your stop loss just under the zone. And if you really even want to be aggressive, you could even set it under this left foot or this right foot here. Like I said, you've got divergence. If you jump up to your weekly time scale, you are working on kind of like a bullish hammer on your second low. You're losing your negative momentum, and this thing hasn't seen positive momentum on the weekly since, the beginning of January. So if you lose your negative momentum, you flip positive, your relative strength index gets out of the bearish control zone, you could absolutely see it start to head to higher levels, but you just got to watch out for it. A couple of things, guys, I just want to kind of point out again. If we take a look at the overall structure, we are sitting 88% retrace, right? From the high or the low to the all-time high, we're down at that like 88.6% retrace, the deep value perceived areas. So this is not a bad area if you are wanting to buy the stock for the long term as well. Anything I think above 25, 27 is a little bit safer if you're buying it for the short term. Anything, above that 1711 though, obviously, is deep value areas, but be careful because if you break that $17 level, you could be headed to much lower prices. And with earnings coming out, if they do not report good, quality moving forward guidance, investors don't like what they see. You could absolutely see this thing break this, this previous low and head down to much lower prices. So definitely keep in mind with that, guys. Let me know what you think down in the comments. If you agree with my analysis, if you have your own price target, I'd love to hear about it. Come over and join us at the Patreon if you want to be part of a great family. This video is for entertainment purposes only, not a licensed stockbroker. Always do your own research and due diligence, and I'll see you guys in the next one. Peace.